Morning, it's October 15th, 2020, and this is the Board Finance and Audit Committee meeting for this date of the California High-Speed Rail Authority. Welcome to all of you across the state of California. We're happy to have you with us and hope we are with you in days of good health and no smoke in your areas. This morning, we will begin with public comment if we have any, and if I can ask the secretary if we have anybody listed for public comment this morning.
Good morning, Chair Richards. We do have a few attendees. I'm going to go over the technical requirements for providing public comment.
Thank you.
Yep. Welcome to the California High-Speed Rail Finance and Audit Committee meeting. Today we are hosting this meeting via Zoom. In a moment, we will take public comment. First, I want to run through some important technical aspects of this meeting for offering public comment. If you are logged into this meeting via Zoom, please use the raise your hand feature, typically located at the bottom of your screen, so that I can call on you to provide your comment. If you're dialing in by phone, pressing *9 will raise your hand and put you into our queue. Speakers will be called in the order that their hand is raised. Once you've been in the queue and your name is called, in the web meeting, please click the prompt on your screen to allow your microphone to be unmuted. On the phone, we will call on you by the last 4 digits of your phone number. At that point, you'll hear a message that you are being unmuted. Once unmuted, it will be your turn to speak. Please slowly and clearly say and spell your first and last name, and if applicable, state the organization you represent. After your introduction, each speaker is allotted 2 minutes to provide comments. Our court reporter is on the line to record these comments. If they need you to spell or repeat something, they may interject. I will notify you when your time is nearly up. At the end of your comment, we will disable your microphone. However, you are welcome to stay on the line to continue watching or listening. If you do not wish to provide public comment and simply want to watch the meeting, you can do so by logging on to hsr.ca.gov and looking for the link to our live stream.
Mo, before we start, if I could for a moment, I just would like to let everybody know that the Board Finance and Audit Committee is a committee of 3 members. Today, we have a full complement here. We have Director Nancy Miller, that's Board Director Nancy Miller, and Board Director Ernie Camacho, and myself. So Mo, go ahead, please.
Chair Richards, none of the attendees have raised their hand.
Okay.
So.
All right. That being the case, then we're going to go ahead and move forward with our agenda. As I pointed out, we do have a full committee this morning. The record will show that. We'll start with our agenda items. Item number 1, could I have a motion, unless there are any proposed changes, to our September 9th, 2020 Finance and Audit meeting? Motion for those minutes.
Move.
Thank you, Nancy. A second, please. Ernie, I know you're muted, but I think I saw you said you second. Thank you. All right, we have a motion and second. All in favor?
Aye.
Aye.
Thank you. Passed unanimously. Item number 2, I would just like to state, and I'm very happy to report that beginning in our committee meeting next month, that board member Jim Gilmetti will be joining this Finance and Audit Committee. And we're all very, very happy that he's accepted the challenge, and we're looking forward to having him with us next month. With that stated, let me move on through our agenda, and we'll begin immediately with our executive summary for the financial aspects of this authority, and that's with our Chief Financial Officer, Brian Annis. Good morning, Brian.
Good morning, Mr. Chair and directors. We'll go ahead and go to the next page to start the presentation. We start, as we always do, with the Accounts Payable, Aging, and Disputes report. The authority has not made a payment penalty now in 43 months. That's about 3.5 years. And we did not report any aged invoices during the August reporting period. We do have about 14.5 million in disputes currently. believe I've noted before, most of that is made up of a single dispute with the Westervelt Ecological Services, one of our mitigation properties, and I'm advised that that was settled in earlier this month of October, so that when that falls off, the amount of disputes will fall to a more typical level we've seen over the last 12 or 18 months, more in the $4 to $5 million range we expect. We go next to the bottom of the page, cash management report. The report reflects, starting with Proposition 1A bond funds. On a cash basis, we have about $175 million of 1A bond proceeds. We do still anticipate a participation in a fall bond sale where we're scheduled for about $80 million of additional bonds. We've also mentioned that if needed on a cash flow basis, we have additional authority for a commercial paper, which can be issued monthly between bond sales. And in fact, in the month of August and September, about 15 million of commercial paper was issued specifically for the Rosecrans Marquardt grade separation project.
Brian, if I could just interrupt for a moment. Before you move on, I'd like to just follow up on something that Nancy was questioning last month, but this is just a different aspect to it, and that's with regards to the cap and trade credit sales and the fact that they have not sold out. Do we know what the balance of credits that have not sold are?
I would be happy to get that for you and share it with the members. I don't believe I have it in my current materials, but I'd be happy.
I didn't mean to catch you off guard there, but I thought it would be an interesting number for us to know, because it would be an indication of additional proceeds that we would see hopefully over the next 2 or 3 auctions as we get caught up.
That's correct. Yeah, as discussed, we did have a low auction cycle in 2017, and over the next, I believe that one was 3 very low auctions, and the catch-up was, I believe, over about the next 8. All of those offered were fully sold after that.
Okay, thanks, Brian.
Watch that. As far as cap and trade, as you mentioned, our current cash balance is $2.1 billion. We do wait for the Department of Finance to issue an executive order to start counting that officially in our cash proceeds. So this $2.1 billion does not yet include the approximate amount of $99 million from the August bond sale. So when we add that, of course, we'll be closer to a $2.2 billion cash balance. And lastly, we show the rail property fund on the cash management report. And again, this is a fund that receives cash from property that the authority owns. Currently, it's receiving some lease payments. We do have about 31 tenants in authority-owned properties currently. So this is the depository for that revenue coming in. In the future, when we sell parcels, the proceeds will also go to the property fund. So at some point in the future, this will grow to larger revenue as we do start selling excess parcels. Funds created, and the money is limited to high-speed rail expenditures, and every year the legislature appropriates a certain amount in the Budget Act, which is currently $750,000.
And Brian, then with regard, that was the question I was going to ask, but with regards to the fact that, as you just pointed out, the funds have to be used for high-speed rail purposes. Within that, are there any restrictions for the utilization of those funds in any areas of our operation?
The statutory provisions are fairly broad on that. We have tended to focus expenditures to date on maintaining existing property resources. So, for example, some of the properties that are leased, we may have plumbing repairs or roof repairs or other tenant-related expenses to keep the facilities operational. So we thought there's a good nexus currently of using those revenues for that type of purpose.
Thank you.
We can move on to the next page. This is our administrative budget and expenditures report. We note that our administrative budget for the fiscal year is 73.6 million. We've noted for the committee in the past that the Department of Finance does some adjustments on our adopted budget. They have various adjustments. Primarily, the big one is for some of the furloughs that were implemented for budget cost savings. And there's a couple other adjustments Department of Finance has made for retirement contributions and other issues such as that. So our budget is really has been reduced about 2.6 million through finance executive order to about 71 million, but we continue to carry it at our budget act amount for consistency, as some of these executive orders do fluctuate as the year goes on. We have 2 months of the fiscal year completed, about 16.7%. And our expenditures in the first 2 months of the fiscal year on administration were 6.2 million, or about 10.1% of the administrative budget. That is for comparison, that is an increase year over year. It's about 600,000 more than we spent last year at this point in time. And of course, that reflects the positions that we added last year to state staff. Our savings this year is also a reflection of new state positions added for this fiscal year. We did have 85 new state staff positions added. Of course, we will be reducing even more consultant positions as those state staff are filled. The authority, as a statistic of how quickly we fill vacancies, the authority has filled actually 119 vacant positions since July 2019. That's a gross number. So on gross, we're filling about 90 positions per month. But in some cases, of course, we have separations of other employees. And in some cases, those promotions are from within, internal promotions, and that creates a new vacancy to fill after that. I believe we can move on to the next slide. So this is our capital outlay budget summary, and we report various breakouts of numbers here. Our top line number, when we look at all capital outlay expenditures in the month of August, was 132.7 million. That includes both our construction package work in the Central Valley, our bookend projects in the Bay Area and Los Angeles, and also our environmental work. When we break that down further to just the Central Valley construction packages, August expenditures totaled $118 million. And if we break it down further to just the design build contractor invoices, that breaks down further to $92.5 million. We do have added since last month an additional bullet here in the middle of the page where we describe the percentage of DB contract expenditures relative to the current contract value. And you'll note all three are in the range of about 60% of the contract value expended through August. If there's no questions, I'll move on to the next.
Let me just ask you a couple of things. With regards to that, at what point, as you're watching our management of budget, do you get to the point where you might be raising a flag of any kind of concern at all with regards to trying to meet the not the requirements, but the expectations of the budget? So I think that if we are looking strictly at the construction portion without the utilization or the expenditure of the contingency, we would be looking at about $200,000 or $200 million a month, with the DB portion of which just straight construction without TIA payments about 107, and so that's frankly much closer than we've ever seen. But I'm just interested in knowing what do we do to try to ensure that we are in many ways, this is staying on plan with regards to the progress of the project to ensure that we are spending the budget as contemplated.
Sure. Well, and of course, this tracking of expenditures is one of the metrics we use to track progress, and several others, of course, in the Central Valley status report when we get there. But you're correct. I mean, we do watch in the dollars spent as a metric to see, both the spending against forecast, but also the month-to-month change and the year-over-year change. So, we are, of course, seeing significant increases, especially in the DB spend per month over the prior year and over the prior 24 months. But you are correct that first 2 months are below forecast. We do typically a mid-year forecast adjustment where in January, if it appears that we're not going to catch up in the fiscal year, if you will, for fluctuating expenditures to date, we do adjust the forecast for the last 6 months of the fiscal year.
And that'll be something, I must say, I can't remember. I'm sure you must have done it, or it's been done in the past, but so we potentially see a reforecast of budgets maybe in January or February then?
That's correct.
Okay. All right, thank you.
Yeah, I have one question. Brian, you have the percentage of dollars spent. Do we have the actual percentage of construction completed against those dollars?
We do have, I don't mean to interrupt, we do have that, I can't remember, I think we get to it in the summary.
I think that's in Joe's report.
It's certainly in Joe's summary, I think. I don't remember whether it's in the executive summary for finance, or I'm just looking real quickly.
I believe we have it here. No, we certainly do have summaries in the Central Valley status report about guideway miles, release structures, release for construction, et cetera. So,
well, you've got, what you do have is right, I'm right on the same page, just up, it's the 1/5 bullet down above here, I think is what Ernie's asking. Is that it, Ernie?
Well, I'm missing where you.
Yeah, it's on the same page, but it talks about the percentage of the CP 1, 2, 3, and 4 that have been expended. It doesn't.
Not the dollars.
Yeah, what this doesn't do is it doesn't say the percentage of completion.
That's what I was looking for.
Yeah, and I think I'm not speaking for Joe, but if he wants to jump on, if he's on board now, jump on for a second. I think it's in his executive summary, but we can check when we get down the road if he's not on board.
Okay.
Yeah, he's got a construction progress summary in his report.
Yeah.
Okay.
Yeah. Thank you, Nancy.
Thank you.
Well, I hope it answers your question. Not sure, but yeah.
We're going to hold you to it, Nancy.
Yeah.
Thank you, Brian.
sure. And by the way, my Cracker Jack staff here has gotten me the number to the question you asked earlier. Previously, we have apparently about 32 million of unsold auction credits. So happy to bring back next month a little more context for that number.
Great.
Yeah, that's lower than I thought it would be. That's great.
Yeah, it's lower than I thought too, Nancy.
Good. And thank you for these numbers. These numbers look really good. I mean, I know we're in summer and so we're churning out there and constructing. It's great. Thank you.
All right. I believe we can move on to the next page. Okay, so this is our total project expenditure summary on the top of the page from all types of expenditures through the beginnings of the program in 2006-07. We record almost $7.6 billion of expenditure. The vast majority of this, 74%, has been on construction, 17% on project development, 5% to date on local assistance, which is the bookend projects. And then there's these administration categories here or support funding. I will note this This breakout is a little different than we've used in previous reporting. We are here breaking out the state operations into the three lines: support funding related to project development, construction, and administration. And this ties to our Proposition 1A categories. Proposition 1A does have some caps on expenditure by type. So we have been tracking that. It is part of the current governor's budget. We did make that part of the formal budget for the first time, where we do note by sub-programs what these categories are. And so we've updated this report now to also show those same categories that we use for Prop 1A. The bottom half of the slide is the ARA match. We have submitted to the FRA through August $1.9 billion. The FRA has stopped reviewing our submittals in early 2019. Through that period, they had approved $477 million. Since then, we've submitted almost $1.5 billion. What remains to fully meet our ARA match is $575 million, as the table indicates. We do have about $300 million in-house that we're hoping to submit within 90 days. So we are very much approaching the ARA match target here and expect to do so early next calendar year. We'll move on to the next slide. So this is our contracts and expenditures report. The authority does have 205 active contracts with a total value of $8.2 billion. The month-over-month value of contracts increased by about $100 million, primarily due to change orders on the design-build contracts. And we also had a contract with Caltrans related to independent quality assurance that was one of the new contracts added. Year over year, active contracts have increased by 9 from 196 to 205. Our small business utilization rate has remained fairly steady. Currently for the month of August came in at 21.4%. As of August, there were 570 small businesses working on the project, including 181 disadvantaged business enterprises and 60 disadvantaged veteran business enterprises. You go to the next slide. So this is our report on use of contingency. When the board adopted the May 2019 program budget, a total contingency of $3.6 billion was established. To date, we've used about half of that. That's the second to the last column on the top table here, $1,776,000, and the remaining balance is $1.8 billion. We report individually on any change orders adopted during the reporting month that exceeded $25 million. We did not have any in August, so there's nothing to report there. Cumulatively, with smaller executed change orders, there was $39 million in contingency assigned.
Brian, can I just ask a quick question about the line item, which is interim use project reserve and then other? Just explain to us, those don't look like contingencies, but they look like reserves of some sort.
Yeah, the interim use reserve, one thing I know about that, I think that was a total of $161 million, if I'm correct, and I believe part of that was used for the radio spectrum that was previously purchased. And that's, I believe that's a specific reserve that's related to some of the federal grant requirements that we hold a reserve.
Is that a required reserve that you hold, or is it something we're doing on our own?
My understanding is it's required and it's sort of a utility reserve, if you will. It's
All right,
the
okay.
government wanting to make sure we achieve utility with our Central Valley investment. So it's sort of on hold and until we have an approved use plan from the federal government.
Okay, and then what's other, just briefly, what's the other category? What's that for?
Well, that includes the largest of that is you see 420 million. That's a contingency that's unallocated to individual construction packages. So it's
Okay.
overarching contingency.
So it's just the pot that can be distributed anywhere, and that's ours, right? That's something we've done.
That's
Okay.
correct.
Thank you.
All right. I believe we have one more slide left. Justin, if you could advance. So this is the second month we've been doing a preliminary numbers preview of next month's report. Again, I want to emphasize these numbers are preliminary. At the top here, we report initial invoices and in some cases, estimates of invoices. These generally flow in the first 10 days of each month for the prior month. So these numbers, I believe I want to set the expectation. In many cases, they'll likely change. Last month, I looked at what we reported versus the final numbers, and looked like we were off $2 to $3 million. And I think that's probably to be expected with these preliminary numbers, but perhaps gives a level of magnitude at how things look at a point in time. So as this, of course, does break it down by each design build package, and then we show each a construction package, which is the design build invoices plus also any right-of-way, the PCM, environmental mitigation, things of that nature in the CPs. And then finally, we have the total capital budget. That's all of those things I just mentioned, plus project development, environmental, and the bookend project. So the preliminary numbers for September are looking fairly similar to August numbers, where DB totals around 90 million. The total for the CPs around 107 million, and total capital about 126 million.
Is this just, I know this is new, and I know this came as a result of requests from my committee members. And is this helpful, Tom and Ernie, to what you were, I know that there was some question. I don't be question about it, but I just mean, this is something I think that we've added additionally. I for one, don't think we need to have this report, but I just want to make sure it's doing what you wanted it to do.
Yeah, it helps.
Nancy, for me, this is incredibly helpful.
Yeah,
Okay.
me too.
All right.
And because this really goes back to the earlier questions with regards to capturing the budget that we have accepted earlier. So this just shows us that sort of progress. And I mean, you can look at each of the, you can get into looking at each of the CPs as Brian has also got that sort of detail. But just dropping down to the last three columns, when you just look at the DB and the CP, as a consolidated into one number, it just shows you where we are. It shows you, at least what you can't even call 1 month a trend, but if that's what we're looking at here. So we're looking at looking for continuing increases in expenditures over certainly the month before. So as Brian said, we're reasonably flat, but then you can also compare this against what we need to be hitting based upon our $2.9 billion budget for this year in order to accomplish that. And then the other part of this that I always take a look at is then what is the expend rate need to be in order to accomplish the December 31st, 22 date with regards to the ARA spend. So,
and Tom, it also shows if you look at the DB 23, there's a difference of $10 million in construction activity. So it's trending the wrong way. So it at least gives us an idea that,
Yeah,
we're going the right way or the
yeah,
wrong way.
yeah.
But
I mean, it's good for staff also because it's a quick confirmation or at least a flag that they I'm sure will have or are taking a look at. It's just in a short presentation that makes it really helpful for us when we're obviously not working there every day. So it may not be that new to the people in operations and to Brian, but it's certainly, at least for me, it's really helpful.
yeah, thank you.
Okay.
Yeah, thank you, Brian.
And just note on the bottom, a couple updated statistics on filled positions. This month was a little unusual. I think our separations, our internal promotions kind of exceeded our net hiring. But one thing, if we'll note on our detailed information, if you behind tab 6 where we detail the administrative detail, there is a page 3 of 4 does show a timeline of filling vacancies, and I think that's kind of illustrative of the how we make progress over the year. And then when we start the new fiscal year, of course, we have a big jump due to the newly added positions. But as the prior statistics I mentioned, I think Human Resources is doing a great job to fill a large number of positions currently. Lastly, on the ARA, we did submit about 35 million of additional match in the month of August. So that took our submittals up to about 1,962,000,000, from 77.2% to 78.5%. So next month, with what we've already submitted early this current month, we're going to jump over that 2 billion 80% mark. So again, we continue to advance this ARA match issue. That completes the financial executive report. Thank you.
Any questions for Brian? Brian, I just have one thing I'd like you to, it won't take long, but one of the things that I have been pretty much monitoring and asking about on somewhat of a regular basis is our small business utilization rate, which, I mean, I think all of us understand or the expectation that will improve with the increase in construction, which, as Joe has pointed out, certainly over the last year we've had in terms of analyzing construction in terms of spend rate, it's certainly gone up. It seems to me, without looking at previous reports, I mean, we've been pretty flat. And so what I'm concerned about is the aspirational expectation at 30%. Are we going to have any ability to achieve that? Is there anything more that we can be doing about it? And what I was interested in maybe looking at this, if I don't think it'll take very long, but if you could give us, say, for the last 3 years, for each 6-month period, would you just give us what that rate is? I mean, we've been pretty flat at 21.3, 21.4 now. It seems, well, we look at this and we were at 21.3 a year ago. So it's not necessarily a criticism. It isn't a criticism. It's what if anything are we able to do to try to move that utilization rate up closer into the area of 30%, which is what the board's expectations were.
Yeah, and I might point out too that in the CVSR there's a slide 15 that show a bit of a timeline. I believe that's a newer slide.
Oh, okay.
But happy to develop something different if that doesn't meet your.
No, let's just take a look at that. I'm not interested in having you to do something that you've already got the information sitting here.
All right.
Okay, thanks, Brian. Any other questions for Brian? Okay, Brian, a great presentation and both thorough and very clear to understand. We really appreciate the changes you've made over the last 18 months or so.
Thank you.
Thanks for joining us. With that, no questions from my colleagues, and we'll go ahead and move on to the next item on our agenda, which is the operations, Central California Valley Operations Report. And Joe, are you with us?
I am with us, Tom. Good morning.
Welcome. Good morning.
Morning, FNA. Let me start. We're in tab 10 now for reference. Okay.
We're with you.
I'm going to do is basically, if you wanted to pull out the executive summary and kind of set that aside, that executive summary summarizes kind of the walkthrough of the slides. So I'm just going to kind of just go through the executive summary. When I will reference the slide that I'm talking about, I'm just going to follow the executive summary and just touch upon some items. So page 2, starting on page 2 of the executive summary, I'm going to reference page 11, right? The fulfillment of the recovery of the ARA. What we're saying is this, is that we're a little bit above. What we've done is our actually CP cumulative invoice to achieve ARA is about 2.862 billion to a comparative of 2.7 or 2.8 billion.
Mm-hmm.
Okay. Now we estimate currently, and this is being refined as we going through the risk analysis, that there is approximately, to achieve ARA, that it will require an expenditure to include tracking systems of about $5.75 billion. Again, this number is going to be revised as we roll out our current risk analysis and EACs that are going to come out as part of the business plan. Okay. Now skipping down to in the executive summary, to the construction packages invoicing. Now, let me answer your question that was asked to Brian. Currently, right now, with a total contract value of the CPs of about $4.8 billion, we've expensed out of that 4.8 about 20 or 2.862 billion. We have a remaining of about 1.942 billion left to go. So that would tell you, since we pay basically off the concept of progress payments to construction progress, that we are just under 60% complete to the amount of contracts that we have awarded. Now, how that breaks down, it's 58.3 to CP1, CP2, 3 is about 61, and CP4 is about 59% for each of the CPs.
Mm-hmm.
Okay. All right. So as we go down to page 10 through 11, we summarize those slides. Here's the good news, great news. The first month in the history of the program, right, that we have achieved a 90 million total CP invoice. We're at 93 last month. Great progress, right? If you look back over the last 12 months compared to where we were the last 12 months, factors, right, of about 4 increase, doing just an amazing job there. I also expect next month's invoice, as Brian alluded to be in the 90s again. Okay. And as we go into the winter months, we'll expect some rain. We might be a little bit hampered, right? But we've achieved that 90 million mark. It's a big, huge threshold mark for the program. Okay. Now, we've executed last month, right, about $99.6 million worth of change orders. You got to go back, and I can summarize this through each of the CPs. But what you have, though, is that 99.6 represents a total of 21 change orders. But there's really 7 change orders that are above 3.5 that drive that 99.6. Those 7 total about $93 billion. And the big one is in CP23. It's the loss of ditch and subsidence, right, which was a total invoice of about $61 million. Okay. So you can see how this kind of breaks down, but there's 7 change orders that kind of drove that 99.6.
Joe, excuse me for a second. For the people who are watching us across the state, what are they seeing that they can follow what you're talking about?
They're seeing right now page 10,
Uh-huh.
okay,
Okay.
which is what I referenced. Basically, slides 10 through 12 is what I'm alluding to currently right now, and the buildup of those slides.
Okay.
Joe, why don't we move to slide 12 to show that expenditure rate? There you
Yeah,
go.
that's better. Thank
That's
you.
what we were looking for.
Thank you, Brian.
Yep.
Can I just ask you a question, Joe, really quick? I mean, on this slide, does this include the tracking system, 500 million you're expecting?
The total to achieve ARA of a value of about just under $6 billion. It does include the tracking systems.
Yes,
that we
okay.
expected.
Excuse me, Joe, does that include tracking systems or just track?
It includes,
Because ARA doesn't have the systems.
it includes the definition of what we call plain track, those elements to achieve ARA only.
Okay, thank you.
That's what that's what you asked.
Yeah, thank you. Good question, Nancy.
That's what the
That's
slide
great.
was intended to say.
These are
Again,
great.
So
the
again,
slides will be revised as the risk analysis is completes. Okay.
Right.
And we hone this up a little bit.
if I could just be clear for folks at home for a minute, if you go back to slide 11, there, that is the distinction between the construction elements, the 4.8, and the addition of the track to get us about 5.7. You see that on the outside part, okay?
Yep.
Then the next slide, again, 12 is your monthly expenditure rates.
Right.
Okay, thank you.
Yep. Thank you, Brian.
Now, go back to slide 11, please, since we're pontificating here. Right now, since we do not have track and systems awarded, right, the driving mechanisms here are only the CPs. You can see the expenditure rate picking up in the future, right? The orange dotted line, that's reflected of the tracking system coming on. When we have that awarded, then we will increase that at 4.8 accordingly. Okay. All right.
Good, Joe. Thanks.
Yeah, yes, sir. Let's go down to the next, talk about construction labor, which is page 13. All right. This is indicative of this growing invoice. This is a very quick key measurement index here. You can see that we topped 1,000, okay, and we're holding at over 1,000 now. Last week we're just on the threshold of topping 1,200. Okay, 1,200 craft workers that we employ on a weekly basis in the Valley. Very, very impressive. You put in the contractor's overhead, our overhead. This is probably in excess of over 2,000 jobs, 2,000 families that the authority is gainfully employing in the Valley. Very proud of this. And if you look back 12 months, where you see that we were sub 500, this is just astronomical. You see the growth of progress that we're making is pretty impressive. Most construction companies would be very envious of the construction progress that we are making. Okay. We still struggle right now, with COVID, we're kind of on that steady state. I applaud the contractors. The protocols that we've put in place, safety protocols that we've put in place, seem to be able to minimize that impact of COVID. But like the rest of society, we're very aware, very conscious of COVID, and regularly suffer the impacts of COVID, both in our labor force and in our vendors. Okay. Let's go to slide 14.
That's just a very impressive slide. Thank you so much, Joe.
Let's go to slide 14. Okay, this is kind of based off of, we've upgraded the schedules now, kind of the RBSs, and we're following them very closely right now. Now, again, remember, this slide is a successor slide really to completing the first order work and the right of way, right? So if you see us fall off here, it's because we're having problems someplace else. And that forces you to go back now and to look where those problems are. Now, our KPIs are so deep at each of these, I can tell you why we're falling, where we're struggling. Okay. As you can see with alignment right now, we're at basically, we have 78 miles right now cleared. We're holding steady there. The next month, you'll start seeing a tick up. We're one site. We were not able to get one site. In the next month, within the first week, we were able to get it. Because this tells me immediately where to focus our efforts at. Okay, that site was down CP4. It was the type 1 structure going over SR 46. We had a little stall getting some permits. So we're able then to focus on, get those permits. And within immediately the following month, remember this is August data, it's early September, we'd freed that site. We've achieved 46 of 46 as we speak. Okay, this is key to keeping advancing the number of workers and opening our invoices. Number of open sites, especially those structures, is where the big dollars are at, right? The more structures we get open, the bigger the invoices we can grow. Okay. Now I want my problem to become this: availability of labor in the Valley. I've employed everybody we can employ, and we're running out of labor in the Valley. That would just be a phenomenal accomplishment. Okay. So that talks to you about the CP construction guideways under progress. Now, what's also important, I want to point out, I added another bullet here that's an accomplishment type bullet. Okay. We've relocated right now. We could break this down. Okay. We have about a total of 2,000 utility relocations to do in this 119 miles. 2,000. Okay. In the first 7 years, they were only able to complete 200 of those. Okay. In the last 12 months, we have accomplished 200. But here's what's more important, okay? We have 400, almost 500 underway, and that grows daily. So you think there's about 243 working days in a year. We are accomplishing right now a utility relocation per day. Very impressive for the crews out there working, okay? This is only going to increase as we're able to free up our right-of-way sites, right? And we have basically the full attention of the utility companies. Okay. Now, I want to basically now go to slide 15. Okay. Now this, remember, there is deeper slides that you have for each of the CPs. Okay. All right. And I can speak specifically to the goals of each CPs right now. Okay. That 731 is 30% of the total amounts that's been invoiced. So that basically says right now that the total right now in the Valley, they've invoiced about 2.862. 30% of that is about 731. Okay. If we were on our 30% goal, that's where this program should be. Right now, the actuals is 431. That 431 represents about 17% of the amount that's been expensed at date. Now, breaking this down again, is you have the slides, the deeper slides, and we can go, as we brief each of the CPs, we can go even deeper and brief each of the CPs and get into what's driving each of the CPs. CP1 right now, this is about 24.4. CP23 is just under 12%. CP4 is at about 13.5%. Okay.
Hey,
Now,
Tom, excuse me one second, Joe. Tom, this gets a little bit to the conversation that you and Brian were having about the small business enterprise. You could see here that
Yeah,
while a large number of our dollars are in the construction area, this is where we are in the construction side only. Our overall enterprise, we're still at 21.4 as Brian reported, but you see this is the area where we need to advance.
thanks, Brian.
Now, corrective action that's being taken is this. We've issued severe letters, contractual letters to 2, 3, and to 4. I've had conversations with regards to both their executives, right? But it's important to note that right now is that what Brian reported as part of the staffing deficiencies, we've lost a large number of our consultant staff as we're transitioning over into form to function, right? We need to, the SBA compliance section with regards to approval, they are bringing on contractors right now, right? We need to advance some of those approvals. But example is right now, is that last month's invoice of CP4. CP4 basically invoiced about 7 million. If they would have had their full complement of SBA approved, approximately 3 million of that 7 would have been basically. So in the present, CP4 is making some good progress. They have a long ways to catch up to the 30%. Okay. Their executives are aware of it, and they have committed resources to trying to approve this. Now, this just goes beyond getting more contractors. This is also changing, going actually to the biggest emphasis is changing some of their terms and conditions with regards to some of these SBIs as to accelerate the paid as paid clause. Okay, because you have to remember that in these mega projects, okay, that to get down to an amount, most of these subcontracts, hauling contracts, for example, for hauling dirt are hundreds of millions of dollars, right? There's no small businesses capable of that 100. So they have to break down these into smaller pieces or have them sub-tier subcontracted out, okay? I can also speak, last project, mega project that I ran was up in Seattle. We run the Rosa Parks Award, which is the highest honor with regards to the SBA. The goal for that project was at 10%. 30% is a very high standard. It's a gold standard in our industry. We are committed to achieving it, but I want to make everyone aware it is the gold standard of the SBA. Okay. That's a third of every dollar we expense. And the issue becomes, right, does the valley and the surrounding areas have this capacity to absorb $1.4 billion of contracts in small businesses? Okay. That's kind of the summary. Now, let me also point out right now, here's another one that you have to be very, very aware of right now is that right now, this is one of the big things I look at. I call it potential. Okay. There's total program wide. We have about 289 SBA contracts awarded that have a net value, right, of about 912 million. So that tells me what I've been advocating to the contractors is you have to award more contracts. Because if you want to achieve this goal, what I've learned over my experience is that you have to be your contracts awarded have to be about 1.3, 1.4 of what your goal is. Okay, there has to be a factor in there. Okay, so that everybody's pushing. We are very acutely aware of the significance of achieving this, right? And we're committed to trying to drive this upward. Questions?
Thanks for that, Joe. I would just say, I know that in particularly large construction projects, it is hard to find the small business definition sometimes, but I do think 30% is that is the gold standard. That is very tough to meet, I think, on some on some level. So thank you for trying to still get to it. And I actually thought we went from about 16%. I thought we actually had increased our participation over the last few years, but I'm trying to find that slide. Do you?
Yeah, you have. What you've seen is this. I'm a big histograph guy. These trends, you can see here we've made some substantial jumps here. And remember, the slide is in very grand scale. You can't really see the gradient of expend, but the gradient of expend is coming up though.
And I think the percentage went up, right? Not just.
It is, as we've increased the amount that we're spending down there, you see the percentage rise. Okay. Now we can make where the potential is right now is in CP 2-3 as in to drive those up. I also want to make you aware of one of the contractual options that you have, and that is that you have the ability. Remember, we're very transparent here. This is what we show the small business community on our bi-monthly meetings with them. No hides. I forced the contractors to brief this to that community. Let them explain their goals, what they're doing. As one of the contract remedies here that you have is you have the ability to summons the contractors to yourself and ask for an explanation. I just want to make you aware of that in full transparency. Okay. Now, let's move on to slides, pages 16 through 19. All right, row summary. Okay, now, currently we started this meeting right now about 2,322 parcels. Okay, we were able to reduce that number by 32 grand total. Okay, now how we did that. Okay, what you see is basically is that we had to add 36 parcels. What you don't see here is we had to add 36 parcels. These parcels were predominantly in CP1. However, they were on parcels of land. Now, you'll hear from Meg and the board later that we've got great control, great visibility of the land that we own now. So now for some of the solutions with regards to this first order work, I always look, the first solution is, can we solve the problem within the land that we owned? Okay, so we added 36 parcels, predominantly point parcels in the land that we owned. Now they'll be delivered right now in the process, probably about next month. So no issues, easy. We own them. There's no acquisition, just a mapping process and a turnover process. Love those. Okay, but here's the big one. Okay, we removed 68 parcels for a net loss of 32. Okay, now we moved 68 with design. Okay, by going back and honing our designs and eliminating some of the need for right of way in the first order work. Again, this drives the get to work slides, the site openings. Okay, very good. Now, why I subtracted them out of here was, remember we had full accountability. I put in a parcel count for every parcel that we needed, even if we initiated and had a design solution underway, because I wasn't sure. Now that we verified the design solution is viable and works, okay, now it allows you then to take the subtraction. Okay, so again, is pretty much right now we have Jen Loudon, right, has the total number of parcels pretty much stabilized as in to finish the Central Valley. Might end up with a surprise every now and then, but we're pretty certain. I'm focusing right now that we need about 1,684 slides. Okay, now we've acquired 13 slides, 13 parcels. In August, we have no delinquent parcels. What by that mean is parcels that would hurt the RBS in the month of August. Now, heads up, I'm going to tell you in the following month that we were not able to achieve all the parcels in the month of September, but we were very quick to recover again, because right now, where every parcel is and how it's linked back to the rebaseline schedules. This is a very impressive, comprehensive.
Yeah, Joe, I think I think this is pretty clear. So I think we're good with this report on where you think you are on roll right now.
Very good. Let's move to page 7. Let's move then to page. Why don't we just go through the production slides 17? You can see, remember that the orange slides, okay, when we take a parcel in another month, we attribute it, every parcel is identified per month. So when we take a parcel in July of 21, it is to a parcel that we needed in July of 21.
We got it. Thank you.
Keep going, please.
Yeah, please.
This goes to the number of railroad parcels, right? Expect to see that we'll deliver 7 railroad parcels in September.
I think we're good here too.
Okay, good. Fence up, 19, the same.
Yeah, okay.
This is land conveyances. Now, good news for land conveyances, this isn't an issue anymore. As soon as we're able to get property, we convey land with PG&E, and they're actually even building a stable of these conveyances that we're just waiting to be able to put in the land conveyance, show that we own the property, and then they're immediately transmitted over. They're working in front of themselves.
Okay, good, Joe.
Okay. Now we can keep going to pages. We can then advance up to third-party agreements, which is page 20. Okay. Currently, right now, we have 2 non-critical agreements that we executed this month. As you can see, these things are advancing. The big ones here is the semi-tropic. Hopefully, it's just a slow legal process of going through these documents, of passing them back and forth with legal. Hopefully, we'll be able to knock out the semi-tropic. Page 21, please. Page 21. One page too far.
Yeah, unless my colleagues have anything on this, I think we can keep going on this. Do you have anything, Ernie? Nancy, do you have anything on environmental? Okay. Yeah, you can keep on going, Joe.
Okay. As environmental clearances, as everybody is aware, this gets briefed regularly, but the big one is that the ERS was released back in August, which was everybody has awareness. That process is advancing. Big risk areas right now is down in the Burbank area and in the Anaheim area, and the teams are focusing right now to work through those issues.
Okay.
That is basically the Central Valley report. I can report on each of the CPs if you want to deep dive in any aspect of the CPs.
I think I'm going to just ask the members if they have any specific questions on any of the individual CPs.
No, I have none.
Okay. Nancy? Okay. I think we're good on that, Joe.
Great, Tom. Thank you.
No, thank you. I think we're good. If you're done with your report, we'll continue moving on, and thank you.
Yeah, that was great, Joe. Thank you so much.
Yeah, and it's making good progress. Steady progress.
Yeah, thank you.
That is the completion of our conclusion of our agenda items. Just very quickly, do either of my colleagues have anything that you'd like to raise at this point?
I have none.
Not for me. Thanks.
Okay. Then Brian Kelly, I'll ask you if there's anything that you'd like to address.
No, thank you, Mr. Chairman.
Okay. Thank you. That being the case, ladies and gentlemen, the Finance and Audit Committee work for today is completed. Thank you for joining us, and the meeting is adjourned. Please join us again at 11 o'clock this morning, which will be it for our High Speed Rail Authority Board meeting. The meeting is now concluded.
Thank you. Thank you, Mr. Chairman.
Bye-bye. Thank you.
Bye-bye. Thank you, Mr. Chairman.